Another disappointing day trading Amazon. Um, I think I'm gonna migrate to Tesla and Apple and play a different strategy. The scalping strategy is just not working in this month, and it almost seems like the market makers see your shares. It's all the trading right now seems to be option manipulated, and right when I get out is when the shares move or when the price moves. But you look at Amazon. So yesterday, yeah, this rundown I knew was manipulation. It's all just forcing shorts, forcing options buyers, forcing me to cover whatever. Had I held on to the shares, I mean, I would have probably been down 6,000 at the close. But had I held it, look at it, all the way back up positive. Gotta have more. Oh my goodness, it's hard to hold on to an option, or whatever your share. $6,000 down. It's just hard, but it's all manipulation. Like I said, the price close, it's not gonna carry over tomorrow, and as expected, the Q gap up, Amazon gapped up. No sell off at the beginning. Instead, they did the push, and this looks like a push initially. Look at that, higher volume, and the signature of the push is so difficult to get in because such a wide range on each one of these candles. Every time it looks like it's gonna fade right before the 5 minutes is up. Boom! They push it right back up to invalidate. At this point, I was just convinced of the push, but I couldn't get in because I just have a hard time getting in the push when you miss it, right? So, geez, and then they show the signature, which to me is a topping signature, but I know about level to level. It's like I keep mentioning on every videos that they like to go from level to level, but I just couldn't. My habit is to buy at the VWAP, and look what happened. I got head faked, and I could have gotten out with 100, 200, but I wanted to make up for yesterday gain, so. Yeah, 700 loss here, another 400 loss. All of these are stops, and all of these I was up 100 or 200 every time. Hit this big one that I held from yesterday, expecting a gap open, and I was expecting to get in after a flush or a mini sell off, hoping for a mini sell off to get in on selling the puts. Instead, sold this put and covered. If I held on, had I held on, would have made a lot more. But this push was actually a attempt of a push, but it's a failed push. And then they took it to, well, here's where I got stopped out at the 100-day moving average. And look at that, they just continue to push it down. Now they held this right before the even line. If they hit the even line, it would have probably flushed and continued to go down. But smart of them to hold it before the even line because knowing just like on the push attempt, you don't want the push to ever get down to VWAP. So if this was a legitimate push, it would never get down to VWAP. The candle would actually stay here and then a continued push. However, when it gets to VWAP, yeah, your habit is just to get in. I mean, how can you not get in on VWAP? Such a strong support, but not in September, not in manipulation September, where there's just so much, I don't know, so much shorts are in it. You just gotta expect level to level, and look at that. They just attempt to go from level to level. They rescue it, but how can you play at this point? Because at any time they could engineer further weakness, especially when you know in the afternoon they see your shares. I am convinced they see your shares at any time you get in, they're going to go the opposite direction. Whether you want it to go up or down, whatever option you get in, they will manipulate the other way, because all they doing is selling shares to themselves, selling micro shares of 100 or whatever direction they want to. They just selling it between themselves to get. All these movements are artificial. These, to me, all these movements in the afternoon are all artificial. They just doing it to force whoever try to get in on the options here to get, I got in on the bounce and so many times it would not move. It would not move. And right when I get out is when it moves. Exactly right when I click the cover, boom, is when it moves. So you can't tell me they don't see your shares, and they don't play the price to, especially in the afternoon. So the only way to avoid them manipulating your shares is to go from level to level, peak to peak, extreme to extreme. These are the only way. You get in and you hold for level to level. So let's play level to level going forward. Now, here is Apple. Now, let's just look at the market, because the market gives you the bias. The other one, I don't think they can manipulate your shares, is on the indexes. So here is, of course, it's gonna end at the 20-day moving average level to level, being the 5-day to the 20 days. That is to be expected. Closed it right at the 20 days. And so this setup for tomorrow Fed FOMC meeting. What do I expect, or what do I hope? I hope for a minor gap down, so I can get in, because whatever gap down you see tomorrow, maybe an attempt of a smackdown, maybe an attempt of a, if I'm lucky, this is where it's so hard, because if it doesn't happen, you miss the run up. But if I'm lucky, they'll get it down to this level, whatever. Maybe anywhere here is where I'm hoping. Not expecting a sell off, but I'm hoping a little bit of a gap down and a sell off, so that they can test this 20 level and pop the 20 level, or the 20 pop the 20-day moving average to get to around here, at which point is where I expect the failure. I expect the failure when it gets here. If it doesn't, if it goes above it, well, let's reassess it. But if they do some kind of failing signal, it will show up on the weekly for next week. So here it is, 5-day moving average going up. So the weekly, let's hope a small gap down, additional buying to push it to here, and maybe if they overshoot it little bit to somewhere around here, a reversal candle, one of these guys for Thursday and Friday, so that the week will end up something with a candle like this, with a high wick. And if it's red, it's even better. If it's green, we don't know, but let's just hope it's red. And that would set up, if it's red, it would have to end the week at below 275, 275. So if it ends below 275 for Friday, by the close of Friday, that would set up for the downturn next week to hit the 20 weeks moving average. Because now the reason why is because this 5 weeks moving average is now a ceiling. Before, it was a support level on the weeklies. All along these 20 candles, or whatever, how many candles it was, they were all support, and now they are the ceiling. So let's hope it fails. Hope it's one of these type of signal right here, so that it can reverse and go to the 20-day or 20 weeks moving average. Let's go back to the daily, and let's see how to play this peak to peak, extreme to extreme. Let's start with Tesla. So Tesla, of course, hit the Monday run up, so that's your extreme to extreme. So now it looks like this could be a potential extreme point to reverse on. Looks pretty decent. This line meets up with this head high. So this is a ceiling. Let's see if they go from extreme to extreme. This would build up a some sort of pattern to go the opposite way. So how would that look? If I were to play this, let's just hope tomorrow, whatever direction, let's just say it gaps down, minor retracement, then something going up, and whatever failure you see, this is where you hope where the extreme to extreme plays out. And Tesla is very strong, so it probably penetrates that. Hopefully, somewhere along here would held the limit, maybe a little doji candle where it pops it a little bit, reverse, and we starts going whatever wiggle it is. That is the extreme point. How long do you hold it? It's up to you. Don't care. The point is, if this is the one extreme, somewhere around down here is the other extreme, or peak to peak. So that is the way to play. Tesla, of course, you can never time. This is the peak. So you're hoping to get in somewhere around here for the reversal. Now, of course, it can keep going higher. Who knows? This is Tesla. But if I'm playing the concept of extreme to extreme, let's just go with that theory where this is an intermediate top, and therefore with an intermediate top you need to have another point before it starts a new extreme to extreme, meaning it needs to pick a good bottom level. Let's just say this is a bottom level, at this level, and that will form the new extreme to extreme for a higher, point up here. Who knows? Or it can just continue to go down, and this will be the extreme, and then the other extreme will be down here. It doesn't matter for now. Just the point is, you play an extreme to extreme, and this is a formation of an extreme or a potential extreme. So if you play an Amazon extreme to extreme, Amazon, of course, is forming a basis. So, let's just hope eventually any downturn will form a new, let's just hope at some point it doesn't. This is a low, this is a low. So, whatever low it gets tomorrow, um, at some point they will do a push. Maybe not tomorrow, maybe, I mean, if the premise of the reversal, maybe this, well, Amazon really doesn't do extreme to extreme, but if it goes positive, I will eventually hope to get a push candidate. If it reverses, which may happen because Amazon still looks weak, so there's always the possibility of reversal, and that would be 3,000 as the low. So if 3,000 is the low, then of course extreme to extreme, this would be the one extreme, and then the other extreme would be down here. So you have this extreme with this extreme, or you have this extreme with somewhere up here, this extreme. So playing the intermediary, you have no idea, because at any point it can do this, that. It's almost worthless to try to scalp the middle. You just gotta have the premise of an extreme to an extreme, whether it be the extreme up or the extreme down. That's how to play. Amazon is looking tough to play, unless eventually you get a classic push, which is a head fake push here. So, yeah, you can get a head fake push with Amazon nowadays. Yep, that's how I lost whatever it is that I lost. End up only making 700 when I was up 2,000 pretty much. Um, so Amazon is not the best candidate to play these days. Extreme to extreme for for Apple. Let's do extreme to extreme for Apple. Let's see what you had missed already. You had missed this extreme to this extreme. So you miss all this. So is there an extreme to extreme for going this way? Yes, this way, all the way that way. So that's an extreme to extreme. Okay, what's the new extreme? Well, let's just pick it. Red candle here, extreme to extreme. Okay, well, yeah. Or you can say extreme to extreme being somewhere like right here and extreme to extreme. So that's your possibility. This guy to this guy, or red pen, this guy to this guy. Yeah, never know, but all you gotta do is target extreme to extreme. Anything in the middle is worthless. Um, so it's very difficult to play. You just gotta have, I guess, luck on your side, whatever extreme you pick. And you just gotta have the discipline, right? There is a channel here, and there is a channel here. So I guess you can kind of see a technical channel and play kind of that if you are to do an extreme to an extreme. So at this point, if there's a technical channel here, there would be a technical channel like that, right? Something like that. And that would be something wiggling here like that. Otherwise, it would be some kind of technical channel going the other way, which would be this guy and this guy. So you would have some kind of movement where it goes like that, right? So tough to play, can't really scalp, have to go from extreme to extreme, or you can just try to stick with the QQQ, maintain playing the QQQ, which really, you can't really make that much unless you play a lot of shares, a lot of options. I don't really normally play the QQQ. It's just not enough movements for me, but it is more stable. Technically, it's still hard technically to play. So that's why I prefer Amazon, Tesla, Apple. Let's look at some of the other big tech candidate. Google. Here you got these two. Now it fails the 20-day moving average. So Google got these type of reversal wick. All these reversal wick potential sell-off candles, pretty much. I mean, that's what you look for when you see a sell-off, right? One of these guys, this guy, this guy, this guy. So, and it's above the 5-day moving average. We'll see how. I mean, Google looks like it should hit this right here. I mean, technically, I don't normally play Google, but if it's enticing enough, if it goes below does Google do extreme to extreme? So, I mean, I guess. So, yeah, if it fails the 5-day moving average, which is what? Here it is. 1525, 1525. Yeah, if it fails this low for this, if it fails this point tomorrow at any time, if it goes below here, extreme to extreme would suggest that it would at least go down to this level. Probably gonna, I mean, I don't know how this is gonna move. If it moves up, if this 100 move up to meet this low, then that would be an extreme to an extreme. But yeah, anything below here would be a negative for Google. So that's a potential play. What about Facebook? Facebook. Facebook is looking more optimistic. Why? Because it did hit the 20-day moving average. Here it hits the 20-day moving average above the 5-day moving average. So Facebook looks, even though it kind of looks like Google, it looks stronger to me. Looks like it would tweet, especially if the rally tomorrow penetrates this 20-day moving average. Facebook is I mean, it's not a higher high, higher low, but if it goes up here, it will most likely penetrate it. So I would say anywhere where it gets to 276, it looks like 276 is above the 20-day moving average. So if it gets to 276 or where this intermediate high, it probably will break out. So you got upside candidate for Facebook if you want to play extreme to extreme. I don't really play Facebook, but yeah, Facebook upside, Google downside, Tesla. Hopefully downside on Tesla, and then a re-emergent. Tesla is really hard to play the downside right now, but if you see it going down, I guess it will go down. I still am very wary of playing Tesla because it is just a golden child, and a golden child can do anything. As far as now, it's probably gonna go one direction rather than if it's gonna go down, it's gonna go down. It's not gonna go down and then reverse course and go all the way up. I mean, I guess that's possible, but who knows? Apple is a very good candidate. Apple range is always so big. Every day is a big range. So extreme to extreme is a pretty good candidate to play on Apple. Any weakness on Apple and would be a extreme to extreme candidate. So this is an intermediate extreme candidate where any weakness can potentially trigger this as the extreme point where it can actually go all the way up here. So that's a nice range, or even higher, right? Who knows? If it gets to 120, that's a nice range where this is the low, this is the high. That's an extreme to extreme. Of course, if it fails the 20-day moving average tomorrow, which way is the 20-day moving average at 115? So if it fails down here, then you have this extreme to somewhere down here is that extreme. So a little bit of patience and you should be able to see what direction it would go for extreme to extreme. But that is what I'm expecting for movements tomorrow is a retest of this. A retest of this and then a failure, hopefully. So it will be a weekly reversal candle which sets up some more weakness for next week.